broadcast is now starting. All attendees are in listen-only mode.
Hi, everyone. Thanks for dialing in. We'll start in just 1 minute to give everyone a chance to dial in. Thank you. Hello, everyone. Thank you for joining. This is Scott Green, Marketing Director with Regal Securities, and we have a special webinar today, Algorithmic Trading Elevated. And today you'll be learning how you can leverage technology to make it an asset with your trading. Because we are fortunate to be joined by Trade Ideas, who is a leader in this field, and I'll be letting our presenter, Sean McLaughlin of Trade Ideas, speak more to that. And I just first want to share this disclaimer, and I'll be reading it here. The types of securities, forms, and research tools used in this webinar are for demonstration purposes only and should not be considered a recommendation by Regal Securities and its affiliates, nor a solicitation or an offer to buy or sell options, stocks, and ETFs. Trade Ideas is not affiliated with Regal Securities, its subsidiaries, or its affiliates. This webinar may be recorded and actually is being recorded and is not intended to be used for individual tax, legal, or investment planning advice. And so, yes, this webinar is being recorded. You all have access to the recording. It'll be posted live on Trade Ideas, either their YouTube page or their website starting tomorrow, and you'll also receive an email on it. So there will be a recording available if you want to rewatch it. And at any point, if you have any questions, please feel free to submit your question in the question box through our webinar platform. We'll try to answer them during over the chat or the question box, or we'll answer them live over Q&A at the end. But we'll try to get to as many as we can. And so now I want to introduce today's speaker, Sean McLaughlin, the Senior Market Strategist at Trade Ideas. Sean is currently located in Colorado, but has been through New York, Florida, Chicago. He started as a trader over 20 years ago, initially experiencing the highs and lows of the dot-com bubble at that time. And in 2002, he began exploring the futures market. At that time, became a member of the Chicago Board and Trade. In 2007, he focused in on options and has been primarily engaged in options ever since. And in 2010, he joined StockTwits, which is the world's largest social media platform for finance. And there he was the director of community, where he led the growth of the StockTwits audience and their audience. He hosted podcasts and interviewed some of the biggest names in trading and in the social space. And of course now, and most recently, he joined Trade Ideas, where he operates their sales, training, and market strategy. Trade Ideas is a valuable tool for active traders and active investors. They are the first and only provider of AI-powered machine learning tools and a SaaS model for retail and institutional subscribers. It's exciting to witness what they're building, and we'll learn more about that today. And with that being said, I now want to hand it over to Sean McLaughlin. Sean?
Wow, thanks, Scott. That was a great intro. I'm honored to be here. I'm honored to speak to the Regal Securities family and your multiple brands that fall under that umbrella. I consider myself honored to be able to speak and share a little bit of my experience and a little bit of the things I've gone through in my career and how I've I'm using Trade Ideas technology to address some of my greatest weaknesses as a trader. So let's jump right in here. Let me take over here. And so one of the things that, or I should say, there are many reasons why traders fail, and I'm not going to shatter any myths here when I start listing out some of these items here. And there's no particular order. There's no order of importance here. But I've got a list of things here of common reasons why traders fail, and we'll start with position sizing. A lot of times traders, when they're new to the business, they just don't have a concept of how big or how small they should be trading. They tend to err on the side of being too big. Everyone's in a hurry to make money. Everyone's in a hurry to trade at a large round number, whether it's 100 shares or 1,000 shares or whatever. They don't really give proper attention to the right way to size positions to give yourselves the ability to have maximum longevity in this business, because at the end of the day, it's those that stick around that are the ones that figure out how to carve out a living in this cutthroat business of trading. Another common reason traders fail is big losses. Everyone's heard about cut your winners or cut your losses and let your losers ride, or let your winners ride. But the sad fact of the matter is that too many times, for too many reasons, there's always an excuse. But for too many of us, we let a big loss somehow happen in our portfolio, whether it was through negligence or through not paying attention or through burying our head in the sand or just not placing proper stop losses. Oftentimes, big losses become a problem for many novice traders, and it doesn't take a math genius to figure out that it only takes a couple big losses to knock you out of the game. Conversely, small wins. A lot of times, and this may be a counterintuitive, there's an old trading saw that I don't agree with, but it's out there, and it says you never go broke taking a profit. Well, if you're in the business of taking very small profits because you're too afraid that they're going to get away from you, well, you're not giving yourself an opportunity to win long-term in this game, because you really have to have the occasional big win to really pay yourself back for a large series of small losses and scratch trades. You need that occasional big win, but if you're always taking your wins too quick, you don't give yourself an opportunity to have that big win. Big wins are so important in this game. They're not going to happen very often, but it only takes one big win to make a week, make a month, make a year. It's happened for me. I can promise you that. Another reason traders fail is poor strategies, and there's a long list of reasons why someone may be employing a poor strategy. Maybe they don't understand statistics. Maybe they don't understand edge. Maybe they don't understand the mechanics of the market. I mean, there's a whole lot of reasons why a strategy may be poor, but for whatever reason, and I'm totally guilty of this, we, as traders, we come up with these ideas that, we don't really properly vet them. They just seem good in theory. They seem good on paper, and then we're just willing to commit capital to it. And more often than not, the poor edge that exists in that strategy plays itself out, and we are left with losses. Another reason traders fail is that they're undercapitalized. Everybody wants to get into this game, and everybody wants to do it with the least amount of money because everyone's scared of losing money, rightfully so. Nobody likes to lose money, and if you're brand new to trading, the idea of ponying up $50,000 in a brand new trading account can be terrifying for somebody who has no idea what they're doing in the stock market. So everybody comes into this game with, the idea that they're going to just, invest a couple $1,000, maybe a few $100, especially in the age of Robinhood, with free commission trading. And it seems like anybody with $50 is trying to open up a stock trading account because they can trade, one share at a time, commission free. And, that is tantalizing for some, but the fact of the matter is that nobody, and I mean nobody, is going to come into this game and start making money right out of the gate. It's not going to happen. Some people might get lucky early on and make a little bit of scratch and feel good about themselves, but chances are there was more luck involved than anything else, and they haven't quite developed the skills yet that are going to serve them over the long run. And so you need to have capital to commit to the market so that you can survive in this game. And I touched upon it a little earlier, but survival really is the #1 job of a new trader. You need to survive. There's absolutely nothing that will take the place of experience and time in your chair, watching the market, executing trades, experiencing drawdowns, experiencing the highs of making money, of experiencing that fat finger trade where you hit the wrong key and you bought when you meant to sell, or you bought 1,000 shares when you meant to buy 100. Any trader who's been around for any length of time has made all of these stupid errors and more. And the errors, at least in my experience, every time I've made an error, it's always cost me money. Maybe that's just bad luck, I don't know, but I've never had an error go my way. As much as I've tried to turn errors into my favor, it never works out for me, and I don't expect it to work out for you either. So being undercapitalized is a impediment to learning this game. You have to have the capital to be able to participate, to be able to make the trades, and to be able to suffer and endure through drawdowns that are an inevitable part of the game, because that is where your best lessons will be learned. I like to say losses aren't losses, losses are lessons. And you need to compile a whole bunch of lessons, just like in any field. The more lessons that you can learn, the better off you will be in the long run. Another reason traders fail are wrong expectations. And we've addressed this a little bit already, but a lot of people come into this game thinking that, give it a couple weeks and I'm going to figure this thing out. I've got a guru I follow on the interwebs that's going to show me all the best trades out there, and I'm going to make two or three wins, and next thing you know, I'm going to double my account, and I'm going to be off to the races. And the sad truth of that is that, and I said it before, nothing will teach you better than experience, and experience takes time. Okay, if you come into this game thinking I'm going to be a successful trader in the first 6 weeks, 6 months, maybe it's certainly possible. I'm not going to say it's not possible, but the likelihood of that, very, very, very low. And then, of course, discipline. Traders can be undisciplined. I am absolutely guilty of this throughout my career. There have been times for any number of reasons where I have just not stuck to my plan. Maybe I was getting overconfident. I had a good run, and then all of a sudden I'm like, everything I touch is gold. I don't need to pay close attention to risk management. I don't need to pay close attention to position sizing. I don't need to worry about a precise entry. I could anticipate that next move because everything I do is working. Well, that's getting undisciplined. And when you get undisciplined, the rails come off. It's as simple as that. So these are 7 reasons I've listed here, and there are many, many more. We could spend an hour talking about all the reasons why traders fail, but these 7 here tend to be the most common. And this actually reminds me of a saying that I say to people all the time, and I call it the paradox of successful trading, and that is that you could fill a room with 100 successful traders, and I guarantee you all 100 of those traders make money in 100 different ways. You may find some commonalities, some similarities, but by and large, all 100 of those traders will make money 100 different ways. On the flip side, you could put 1,000 losing traders in one room, and I'd be willing to bet that those 1,000 losing traders are probably all losing money for one of these 7 reasons right here, or maybe even 5 reasons. So I call that the paradox of successful trading, because there's only a handful of ways that pretty much every trader fails, and there's 1,000 different ways that everybody can make money, yet making money is so hard. That's the paradox of successful trading. Well, I need to issue a mea culpa here right off the bat. And for me, I've certainly succumbed to all of these reasons here of why traders fail. But for me, the biggest reason I have struggled in my trading career, and I've been trading for 21 years. I started in 1998. And the biggest reason why I have failed as a trader, absolutely 100%, is due to strategy drift. Here we go. Strategy drift has been my Achilles heel. What do I mean by strategy drift? Well, in its bare bones, strategy drift means someone comes up with a strategy for, they've done the work, they have a belief in it, and then they start executing on it. And then after they've been executing on the strategy, at the first sign of trouble, instead of going back and digging in and figuring out what's wrong and making the necessary tweaks, instead, you just throw it into the scrap heap and get to work on creating a new strategy. And this is a cycle that repeats itself over and over and over again. And this absolutely has been my Achilles heel throughout my trading career. Throughout my trading career, I have changed products, I have changed time frames, I have changed strategies, I have changed brokers, I've changed everything in the pursuit, in the lost pursuit of trying to find the strategy or set of strategies that work best for me. So let's talk about strategies and why strategy drift can be so damaging and so hurtful to your progression as a trader. Let's start with how we build a strategy, right? It starts with idea conception. All right, now an idea can be anything. You can be hit over the head while playing softball and like, oh, hey, I got an idea for a bounce strategy, right? Or you could be washing dishes and have an idea for a washout bounce play. I mean, it doesn't matter where ideas come from, but there's a kernel of an idea. And believe me, I've had trading ideas hit me out of the blue in the strangest of places, in the strangest of circumstances, far away from a computer, far away from a trading pit, while on vacation sometimes. Like strategies the concept of an idea can hit you at any moment. And then the next step from there is modeling that idea. What do I mean by modeling? Well, what do I need to do? What are the triggers to get me into a trade? Like, am I buying stocks that are breaking out? Am I shorting stocks that are breaking below a 20-day moving average? You got to come up with what the triggers are and what the types of stocks are that you want to trade. That takes a little bit of time. Once you've modeled out the idea, then you just need to start testing it. And I'm talking about the best practices here in strategy building. Sometimes some of these steps are skipped by amateur algorithm builders, and I've certainly been guilty of skipping steps along the way as well. But when I've done it best, I've followed these steps here. So then with idea testing, and this is something I've done by hand. Like I mentioned before, I started trading in 1998, and especially when I got involved in futures trading, I was a serial developer, amateur developer of different strategies, and I would come up with my ideas, and then when it came to the testing part, the back testing part, I would literally look at tick data or 1-minute chart data and go back as far back as I can until I exhausted myself, going minute by minute, tick by tick, analyzing whether or not this strategy would have worked in a back test. And then once you've run your back tests and you've come up with the data that the hard data, that what's the P&L here, what's the profit and loss, what's the drawdown, what's the length of a typical drawdown. Once you've got all that data, then you have to decide, well, am I comfortable with this data? Do I like this? Is this something I can actually work with in a real world scenario? And oftentimes, at least on the first pass, the answer is no. There are things that need to be changed. So you go through a process of optimization. You go through a process of trying to figure out, okay, well, what can I do to this strategy just to tweak it somewhat so that I can arrive, closer towards, an equity curve that I can deal with, that my buying power can handle, that my stomach can sit through when it comes to in terms of drawdown. So the optimization process can be a very time-consuming process, absolutely. And then once you've arrived at a level where you've optimized it to the point where you think this is going to work, next step now is forward testing. If you're doing it right, you're not ready to commit capital yet. You're just now going to start following this strategy with maybe a paper trading account, or maybe just watching the market and writing down when you would have entered and exited trades, and you need to follow that for an undetermined period of time until such point where you feel comfortable that, okay, this strategy does seem to be working in the market. Great. At that point, then you're ready to put money to work. And we all know that once you put real dollars to work, that changes the game somewhat, even if for no other reason than it changes your emotional response to the intraday and daily fluctuations of equity as your capital is at risk. And then, of course, after you've put your money to work and you've realized, okay, well, yeah, I thought I could sit through a 10% drawdown that takes 3 weeks to get back to new highs. I thought I could sit through that, but now that I actually did just sit through that with real money, I didn't like that. I need to make some changes. And then with the circling back, that means you're kind of going back maybe to the idea modeling phase, maybe going back to the idea testing phase, and going back to the optimization phase to get you back to where you need to be. So the point of listing out all this stuff here with building strategies is that this is a time-consuming process. And now I bring this all up because I mentioned that my mea culpa, my Achilles heel with my trading throughout my career has been strategy drift. And so with strategy drift, this takes time. This costs money. This is opportunity cost. After I've put in all this effort and all this time to build a strategy and then get to the point where I'm actively trading it, and maybe I actively trade it for 5 months, 6 months, and it works well during that time, and then I hit that inevitable rough patch. And that inevitable rough patch scares me or freaks me out, and it kind of sends me back to square one, where I'm going right back to idea conception and trying to come up with a new idea. Well, I'm here to tell you that I'm 22 or 21 years into the business, and I've spent probably the last 16 years of it dealing with this cycle, going back and forth, having success, and then hitting a rough patch and freaking out, and then going back and trying to come up with a new idea. And it's like, what do they say? Insanity, the definition of insanity is doing the same thing over and expecting different results. Well, I feel like in some ways my strategy drift and going in circles, coming up with new strategies over and over and over again is a form of insanity. I know that sounds crazy, but that's the hard truth. So all this process takes time and it costs money. How can we do that better? Well, we are here to talk to you about trade ideas and our AI virtual assistant, Holly. Holly has been designed for people like me to kind of take the laborious process of creating strategies and testing strategies and forward testing strategies, all that process that we just went through that takes time, that takes months and years. Holly has been designed to do all of that hard work for us. It may sound too good to be true, but I'm here to tell you that the Holly platform, which is comprised of 70 strategies, in-house strategies that have been built by the Trade Ideas team, it exists of 70 strategies that are constantly being optimized on a nightly basis a process that, as we've already explained for you and I, these processes can take a long time. Well, Holly does it every night and optimizes every strategy so that every strategy is designed to operate best in the current market environment. And then on a day-to-day basis, Holly, our AI virtual assistant, will take from our stable of 70 and she'll tell us, hey, of all 70 strategies we have, here are the 5 or 6 or 7, depending on the day, 5 or 6 or 7 strategies that have the best profitable trading ideas for us on the next trading day. And so our job, working with Holly, the AI virtual assistant, our job is simply to execute. Holly shows us the trades. It's up to us to execute. Now, before I bring up the product demo, I think it's important to let everyone know that there's power in this. There's power in giving up. Okay, and I don't mean giving up. Maybe that's the wrong phrase, but there's power in knowing that all the hard work has been done beforehand. It's been done for you. The hard work of conceiving a strategy has already been done. The hard work of modeling it and building the triggers that get you into the trade has been done. The hard work of filtering the universe of stocks so that the strategy only trades certain types of stocks that are unique to that strategy, that will work best for that strategy. All that has been done for you. There's a certain element of giving up and trusting the system that has gone through this process and has done the back tests, has the data to prove it, that this strategy works in this market environment. I'm struggling for the word here, but there's a certain level of acceptance that, hey, I'm going to give over the controls, so to speak, to this machine who's doing all the heavy lifting. And my job is simply just to trust that these trades that are happening, there is an edge behind them. Will every trade work? Of course not. Every trade is not a winner. And in some days, many days, the AI in total, or Holly in total, is a loser. But I can tell you one thing. Holly is never a large loser. Holly adheres to the number one maxim of an active trader, and that is never take a big loss. Holly is going to make sure that you avoid that big loss. If nothing else, that's worth the assistance right there. But Holly is going to put you in trades that have a statistical edge. And if you're somebody who believes in math and understands math, we know that if we are consistently putting ourselves into trades that have a statistical edge, then over the long term, those edges absolutely should play out in our favor. Now, I'm going to bring up my product demo here real quick. Just give me a sec as I bring up my screen. And here is a look at the trade idea screen. And by the way, I know that Scott mentioned at the top of this call, but it's worth reiterating here. We do have a questions panel. So if anyone has any questions as we're going along, I'll try my best to answer them as they come in. I may have to just kind of put you off until the end, and we'll answer all the questions as they happen. But there is a questions panel. So if you are wanting to ask a question, please feel free. All right. And by the way, I assume you guys could all see my screen here still. I've lost the little thing that tells me whether or not I'm showing my screen. I'm assuming you guys can all see my screen. So, Scott, if you're listening, just let me know if you're seeing everything just fine.
Yep, can see it just fine.
Great. Thanks for that. Okay. So what we were looking at here is the Holy Grail channel on Trade Ideas. Channels, we call channels. If I were to click any one of these buttons, these would take me to a different pre-configured layout. that will that they're all all done for you. And many users of Trade Ideas build their own layouts and they can customize them as they want. That's all fine and good. But for our purposes here for this call, I'm showing you the original Holly channel. We call this the Holly Grail. We do have 3 versions of Holly now. We have Holly Grail, Holly 2.0, Holly Neo. Essentially, what they are is they're just riskier versions of the original. I don't want to say riskier, but they're willing to take on a little bit more risk to go after more outsized gains. So what you're seeing here on my screen is, the market's closed, obviously, so we're not going to see any trades coming in here in real time. But obviously, everybody recognizes what charts are. We got some charts across the top. I want to bring your attention to this window right here. This window here is the AI strategies window. And today, these are the 5 strategies that we had active. Now, I had mentioned earlier in the call that the AI is built of 70 strategies, give or take a few, but I think we're up to around 70 strategies now. They all have cute little names like Bond Shorty, Downward Dog, Sunrise Mover, etc. All of these strategies are designed to do different things, but it's important to remember that while the overall broader intention of each strategy never changes from day to day, how each strategy operates on a daily basis changes from day to day due to the AI engine going in and re-optimizing every strategy and tweaking, maybe tweaking the filter set of the types of stocks that it wants to trade, or tweaking something to do with the entry or the exits. By the way, when I say things like filters, I should maybe take a little sidebar here and let you know. A filter is a thing like, say, a price. Maybe this Sunrise Mover strategy only wants to trade stocks that are priced between $10 a share and $50 a share. That would be a filter. Another filter might be we only want to trade stocks with a minimum market cap of, say, 500 million. Okay, that's a filter. Trade Ideas uses hundreds and hundreds of unique filters and various combinations therein for each one of these strategies. And that's part of the secret sauce that allows these strategies to excel. So these are the strategies we had active today. Now, this window here is empty, and it's not going to change because the market is closed. But throughout the day, if the market was open, when trades happen, they pop into this window. You get an audio alert, you get a visual alert that tells you that that Holly entered a trade. And when she gets into the trade, you will see where her stop loss is, where her profit target is. So you'll see those first 2 reasons. You'll see those 2 areas where she may exit a trade. There's actually 5 reasons why Holly will exit a trade, and you can see them here in this window. These are all the trades she got into today and closed. These are the ticker symbols DY, AMN, AC, HC, etc. In the final column here, you can see the exit reason. So I mentioned the first 2 reasons Holly will get out of a trade. The stock either hits its profit target or its stop loss, and in fact, visualized here on this shows you where Holly got into this. This was a short trade. Well, it was a very nice short trade, in fact. You can see where she got into the trade. You can see where the stop loss was. You can see where the profit target was. So very clearly visualized for anybody who's following along. Those are the first 2 reasons she'll get out of a trade. The other reasons are timed exit. Every trade has a ticking time clock, all right? Every strategy has a different time clock. For example, and I'm just making this up, I'm not sure what the actual numbers are, but the Bond Shorty strategy might have a 20-minute hold time, whereas the Downward Dog strategy might have a 3-hour hold time, okay? So if those stocks don't hit any of their other reasons why they would get out of a trade, well, when it gets to the end of its time limit, Holly long time to close the trade and redeploy capital elsewhere. So timed exit is one reason she'll get out of a trade. Sometimes with reduced risk, what that means is when Holly gets into a trade, she gets into the trade for a very specific reason under a very specific assumption about the current market. Now, once she's in the trade, if this stock that she was following that for most of the day was moving up or down in a up or down no more than 25 cents in every 5-minute candle, that's considered normal trading activity. And then all of a sudden it rips $1 in one direction and then rips $1.50 in the other direction. All of a sudden, as far as Holly's concerned, that means that stock has changed character. And in cases like that, she's programmed it to often exit a trade when a stock changes character, because all of a sudden the risk that she had originally analyzed in this trade no longer applies, and she doesn't like being in situations where things are happening that she did not foresee. So reduce risk is a common reason she'll get out of her trade. And the final reason is profit save. Quite simply, each algo has a different parameter for profit save, but the easiest way to explain it is, let's say we get into a stock and it goes $2 in our direction. That's wonderful. Well, if it starts pulling back and it pulls back $1 of the $2 that you were once profitable, Holly may be programmed to say, okay, well, once I've given back 50% of my maximum profit, that's where I draw the line in the sand. I'm not willing to give back any more. That's where I will close the trade. So every strategy has a different algorithm for profit save, but that's typically what that means. Is she's willing to give stocks some room to go against her, or at least give back profits, but at some point she's going to draw the line and say, okay, that's enough, no more. So those are the 5 reasons Holly will get out of a trade.
Hey, Sean, are you able to expand the window size?
I am not able to make this any bigger, I don't believe. I see that question there from Pat. Not sure what kind of monitor he's working on.
Okay.
But no, I'm not able to make it any bigger. There's a question here from Rick. He asks about Holly. Is Holly's work is for day trades? Great question, Rick. And yes and no. The way the platform is built currently, Holly is indeed intended for intraday trading. She carries no trades overnight. She is in cash by the end of the day. Now, that is not to say that Holly cannot be a very useful tool for active swing traders. And in fact, that is how I typically use Holly. I am more of a swing trader. And what I do as a swing trader is I will every day at the conclusion of trading, I will go through all the closed trades that Holly did today. And I will start cycling through the charts. So I could just click on any of these tickers here and it updates the charts up top. I'll cycle through these charts, and if I see any chart that appeals to me as a swing trader, and these are daily charts here on the left, I will have the added confidence of knowing that Holly saw a catalyst here that got her into a trade, and that catalyst doesn't expire at 4 p.m. Eastern when the market closes. That's just an artificial constraint that we have placed on the program. We are not, or I should say that the catalyst could be something like maybe Holly detected an explosion of volume, or Holly detected the stock crossing a key moving average, or Holly noticed an influx of institutional buyers. I'm making things up here, but whatever the case may be, whatever the catalyst was that she saw that got her into this trade place, that catalyst has the potential to move a stock for several days or several weeks at a time if we're lucky. And so if I pull up, I'm just going to pull up a random stock here. Well, it's not random, but let's see, was it STMP, the one that I looked at the other day? No, that's not the one. Can't think of the one that's off the top of my head. Oh, I know what it was SMR. I knew it started with an S. So I pull up SMR. What I'm going to do is here, I'm going to blow up this chart a little bit. You'll notice on daily charts, our charts show you, see these blue buy buttons. Sometimes they say sell, but in this case, these are all buys. These blue buttons show you past Holly entries. So on January 4th, there was a buy signal to get in. Now, again, these are past entries with Holly, and of course, these were all intraday trades. But it doesn't take a genius to detect that, hey, if I was a swing trader and I noticed that there was a buy signal here on January 7th, and I looked at that chart and said, hey, I like that. I might take that for a swing trade. This ended up being a very lovely ride for 6 weeks or so, 7 weeks or so, with very little pullback to speak of, depending on how you how you trail your trailing stop on something like this, this was a great ride. Of course, this is a very cherry-picked example. There's a lot of buys in the past year that might not have worked out for a swing trader, depending on how nimble you were. But the point is that a trader with a swing trading perspective can look at these Holly trades and have just that little extra bit of confidence in knowing that, hey, there's an edge here. Holly's detected something. This catalyst could push a stock for several days or several weeks if we're lucky. And so as I'm going through, and this is a best practice I engage in every day, as I go through all the trades that she did, I typically ignore the short trades, and this is just my preference. I'm not saying this is the right way, but as a swing trader, I like to trade stocks from the long side. So I'll look through any long trades that she did today. Today she only did short trades, and that was kind of the market we were in today. So that was a smart thing to do. Well done, Holly. But I'll tend to look for the long trades and cycle through those charts. And if I see anything that is compelling, I may be motivated to act. But that was a long-winded answer to your question, Rick, about is Holly set for day trades. As you see Holly trades on the platform, yes, they are all set for intraday trading, and that's how most people engage with Holly. I see another question came in from David. Give me 1 second, David. Let me read your question. Does Holly ever take into account in her strategies, and in particular stocks she calls out, her past picks on those stocks? Good question, David. I want to say that the answer is yes, but in reality, the answer is probably no. Holly is, she doesn't, she's not biased by any past trades. She takes every signal on its own merits. If everything lines up the way she wants it to line up, she's not deterred by what happened in the past. Who cares if the last trade was a winner or a loser? She sees an edge, she's going to act on it, and in one way, that's how she's better than a human. Okay, I think I'm pretty clear on the questions. Well, I don't want to get too lost in the weeds here of Holly, and I'm happy to answer questions as they come in. But I wanted to show you, just give you a visual of what this platform looks like. This is the Holly Grail channel, and you can see these are all the trades she did today. And I'll point out on this graph here, you can see a profit of $267. Now, what is that? Well, $267 is I have my thing set, and you could customize this any way you like, but I have my P&L graph set to show me what my P&L would be had I taken every trade that Holly did today, and I did it with 100 shares, a constant 100 share size, regardless of the price of the stock. I was just a 100 share trader, and if I did every trade, this is what my P&L, this is how my P&L would have trended today. I would have ended on a high. That's a nice way to end the day. I would have ended on a high at $267. Now, this is risk on profit. You'll notice we display two scores here. I just toggled, now I'm showing risk off profit. Risk off only shows $85 in profit, not as good. What's the difference here? It's a very important difference. Risk off actually measures the actual P&L you would have had if you had taken every trade that Holly did, both the entry and the exit. So you got in at the same time and price she got in, and you got out at the same time and price she did. This is what your P&L would have been, 85 bucks. Nothing to write home about, but hey, $85 profit is better than a sharp stick in the eye, right? Risk on profit and risk on outperform today, that's a little bit different. What this is showing you is that is what your P&L would have been had you taken every entry that Holly had gotten into, but instead of getting out when she gets out, you're going to hold that trade until the end of the day and get out at the close. Okay. Now, I always tell people, yeah, if you want to trade, the risk on way, that's fine, but I would at least, the very least, honor whatever her stop loss level is. I don't want to sit in a trade that's ripping against me only because I'm committed to matching the risk on profit profile. I'll always take the suggested stop loss. But in most cases, the risk on P&L will track how you would have done had you entered every trade that she did, but you held on until the end of the day and closed it at the end of the day. And obviously, at a day like today, where stocks generally trended lower throughout the day, Holly did 5 trades today, all of a short nature. So it makes sense that her P&L kind of trended higher for most of the day and finished on its high because she was short. So, and a final point about the risk on, risk off histogram here. This is a useful tool, especially for an intraday trader. Even if you're not doing Holly trades, if you're not doing the same trades she does, it's good to pay attention to how the P&L graph is running compared to each other. On a day when risk on is outperforming like it did today, that is a pretty clear signal to a day trader that, look, if you put on a trade, whether it's a Holly trade or or your own trade, a trade that you came up with on your own, if you get into a trade and you find yourself quickly profitable in that trade, maybe you're up a quick 50 cents and the thing's going your way, it's wonderful. You may be tempted to take that profit, or you may be tempted to maybe sell half, or protect that profit in some way. But on a day when risk on is outperforming risk off, that tells me that trades are following through, and traders are being paid to sit on their hands and let trades play out. So on a day when risk on is outperforming, if I put a trade on and I'm quickly up, I'm feeling good in this trade, I'm making some money, well, that's the kind of day where I'm going to go get up from my seat, go for a walk, fix myself a sandwich, play with the dog, whatever you need to do to get yourself away from the keys and reduce the risk of making a snap decision that might prove to be harmful to your account. And then conversely, on days when risk off is outperforming, that was not the day today, but on days when risk off is outperforming, that's a pretty clear indication that we're in a choppy market. Profits can be fleeting. You'd be better served quickly taking profits when you have them, or at least quickly moving your stop losses to break even whenever you're sitting in an open profit, because on a day like today, it's choppy and you'd be best served being nimble. So I guess we'll stop there. I had a couple questions come in from two separate people asking about options, wanting to know, does Holly trade options? Holly does not trade options. Holly only trades US stocks at this time. Now, options data can come into play within the strategies as far as filter requirements that need to be set. I'm pretty sure Holly in some of these strategies has some filters that require a stock to have above average options volume trading today, because that can be an indication that something's up, somebody knows something. So options data is analyzed when it comes to coming up with trades, but she does not trade options, only US stocks. All right, so we've gone a little long here in the tooth. I apologize for being long-winded, but I want to bring my presentation back up to kind of round out our talk here. I really just want to leave you with this, and then we'll open up some questions if anyone has any further questions. The beauty about Trade Ideas Holly, the virtual AI assistant, is that when you use AI, when you use Holly, the AI virtual assistant, instead of now having to be a genius trader who's coming up with strategies and putting in all this hard work, not that there's anything wrong with putting in the work, but instead of spending all that time and going in those circles and getting stuck in that rut that I have been in throughout my career, where I'm constantly going back to the drawing board and coming up with new strategies, wouldn't it be better to just make yourself a glorified order entry clerk? I mean, I say that tritely, but there's a famous trader. He's famous in some circles. He lives near me here in Colorado. His name is Peter Brandt. Perhaps it's a name you guys have heard of. He's a fantastically successful commodity trader. He's been trading for 50 years, somewhere in that neighborhood, a long time, or parts of 5 decades, I think is what he likes to say. He's made millions of dollars in his career, but he's not above telling anybody. He says, look, at the end of the day, I'm just a glorified order entry clerk, because he's already built his strategies. He's done the work. He's back tested them. He's got the strategies. He trusts them. And so he leaves it up to the strategies to give him his signals. And then all he needs to do is just take that signal, place the order, size the trade correctly, and then let the process play itself out. He doesn't do anything else. He calls it mindless work. And it doesn't sound very sexy, and no one's gonna make a TV show about you being a glorified order entry clerk. But some of the most successful traders I've come across in my career, that's exactly what they are. And Holly allows you, somebody who either doesn't have the expertise to be a strategy builder of your own, or maybe just doesn't have the patience or the time or the inclination to go through that hard process. It's a hard process. Holly does all of that for you. Can you trust it? And if so, can you execute? If the answers are yes, then I would implore you to come to trade-ideas.com/Sean, that's my name, and come find the discount code there and give Trade Ideas a try. I think it will be an amazing experience for you to leverage the power of technology to make you a better trader and to help minimize the pitfalls that many of us traders go through and that I myself have experienced. Don't get into the strategy drift trap. Instead, let Holly do the strategy drift for you in a smart computer way. She's doing the strategy drift in a way because every night she's going through all the strategies, she's re-optimizing them, making sure they work, and then picking a handful of strategies that work best in this market environment and making those active for you. That's strategy drift working for you, not hurting you. Well, ladies and gentlemen, that brings me to the conclusion of my presentation. If you want to learn more about Trade Ideas, please go to trade-ideas.com/Sean. Learn more about me, learn more about Trade Ideas, and you can find a discount code to try out Trade Ideas. We do monthly subscriptions. It's a great way to try it out. And for anyone who subscribes, we offer free training classes every day of the week to learn the software. We all know, anyone who's ever opened up a brokerage platform, an online trading platform, the first time you open up that platform, there's a learning curve. It can be overwhelming looking at anything new, any software new, and Trade Ideas is no different. But we think that with the right kind of training and the right kind of patience, you'll find that our software is pretty damn easy to use. You don't need to be a coder to use it. And so we'd welcome you to try it out. I see one question just came in real quick. Do I understand that all trades are closed at the end of the day? Yes, Ronald. When it comes to Holly is designed to be an intraday trading system. All trades are closed up by the end of the day. She carries no trades overnight. Well, Scott, I think I've wrapped up everything I need to say. I don't know if you had any questions that came in at all specific to Regal Securities that you want to address. We'll hang out here for another minute or two.
I think we're good. Sean, thank you very much. Now, if anybody has any questions, you have Sean's information there. You can always go to the Trade Ideas website. If you have anything related to Regal Securities, please contact your broker, and you have their phone number and their email address. Sean, thank you very much. It's really eye-opening what your software can do, and it's very exciting to stay in touch with some of the latest tools out there to help our traders. So thank you very much.
Thank you, Scott. It was a pleasure speaking with you.
Absolutely. And thank you to all those who've joined us this afternoon for taking time out of your day. We really appreciate the questions coming in too. You'll be receiving more information from Trade Ideas. Again, reach out to them with any questions, or if you want to check out more of what they have to offer. And everyone, again, this is being recorded, so you'll receive a copy of this webinar to watch it on demand. And thank you once again, everyone, for joining us this afternoon, and have a great rest of your day.
Take care, everybody. Thank you.